Hello, everybody. Welcome to Monday evening session. Today's session is all about a forgivable grant program that we have access to. So I wanted to, first of all, let you know that this is going to be recorded. So don't worry about getting all the notes. Also, I do have access to my calendar where you're able to come on and get on my calendar for either 15 minutes or 30 minutes. We start off with 15 minutes, and you can ask me any follow-up questions that you will have. You can always ask those questions in the chat as well this evening. But then if you have certain specific questions that are with regards to your specific situation, then I will be dropping that link for my calendar in the chat as we go. I wanted to introduce myself. I am Cheree of Simply Funded. Simply Funded is a mortgage lending company. I am personally licensed in Maryland, DC, and Virginia, and this grant is available in all three places. That is if you are purchasing a primary home. I also do a lot of work with investors. So if you are an investor who is buying nationwide or has an investment property that you are refinancing, or you want to get a home equity loan for that investment property anywhere in the nation, I'm able to help you with that as well. So I do want to give you a little bit of information, though, about this forgivable grant program that we have access to. It's a really great program, and I think that you're going to like it. I will say, though, that this is not the only down payment assistance program that I have access to, but it is one of my favorite ones. So I'm going to share the information with you today. So I see we have a few people in the chat or on here live today. If you all would just put in the chat, where are you looking to buy? Where are you looking to buy? You can either tell me a city, you can tell me a county, you can let me know if you're not sure yet. I just want to get a feeling for or feel for where you're looking to buy your properties. Okay, so we have John saying Fairfax County. Anybody else want to tell me where you are looking to buy? Kabir is in the building saying Northern Virginia. Where else would people want to purchase property? I know we have a couple of additional people, but that's okay if you are taking care of dinner right now or the kids or anything like that. I perfectly understand. Just wanted to make sure that I am giving you the information and the content that you are looking for this evening. Yes, absolutely. Thank you, Kabir, for attending. All righty then. So this program that I'm going to be speaking about this evening is called the Empowered Down Payment Assistance Program, and it's available in 49 states. It's not available in Washington State, however, but if you're in Maryland, if you're in Virginia, you definitely have the ability to participate. You should be able to participate in DC as well. If anybody's looking to buy in DC, I can definitely follow up, but it did specifically say 49 states, and I'm pretty sure DC is included in there. Overall, how does this program work? First of all, it is a program from one of my preferred lenders. There's a company that we work with called EPM, and they are the lenders. You can't go to them directly and say, hey, I want this loan, I want this down payment assistance program. You actually have to go through a broker or somebody who is licensed, who is able to connect you with them. So hopefully I will be that person and that connection for you. But it is an FHA loan. FHA stands for Fair Housing Association or Administration, sorry. It is an FHA loan. It is, again, available in 49 states. The only place it's not available in is Washington State. You may be asking why. I don't know. But, those are the rules for this specific program. It has to be a primary residence. So for all of my investors here, unfortunately, you're not going to be able to participate in this unless you're buying it as a primary residence. It's got to be 1 to 2 units, so no multifamilies. It is a completely forgivable grant. You can choose to either get the 2% grant, and it's 2% of the purchase price, or the 3.5% grant, which is 3.5% of the purchase price. And the reason why we're able to say you can get into a home with no money down is because the FHA grant allows you to get into a home with 3.5% down. So if you choose the 3.5% grant, then that basically offsets your down payment costs, and all you would have to do is come to the table with your closing costs. This program can be combined with seller concessions as well for closing costs. Now it says up to 6% seller concession. The amount of seller concessions you can ask for depends on the amount of down payment that you're putting on the property. So you can, for example, get 3.5% grant and still put more money as a down payment into the property in order to reduce your monthly mortgage. You can definitely do that. But depending on the amount of money that you are putting into the property as a down payment will determine how much seller concessions you could actually qualify for. And seller concessions in a competitive market like we are in the Metro DC area, they're harder to come by than if you are in a less competitive market. With this down payment assistance program, there are no resale restrictions. What does that mean? Sometimes when you have down payment assistance programs that say, well, you can get this money, but you have to live in the property for 5 years and you cannot sell it and you cannot refinance it. This specific down payment assistance program does not have those restrictions. So you can basically get the 3.5% grant, live in the property for 12 months, and then rates go down, and then you're able to refinance into a less expensive rate. Or you're able to sell the property and you don't have to worry about, oops, this money is turned into a loan, or oops, this money, has to be paid back when you sell the property. The other interesting thing about this down payment assistance program is it can be used for fixer upper homes. So some of you may want to buy not a money pit, but just maybe a dated house. Maybe the house was built in the 90s or the 80s, and it's got an old bathroom and an old kitchen, and you want to spruce it up. There is something called the 203K loan. And what you're able to do is you can use this down payment assistance grant and get the 203K loan and basically have repair money in order to repair the house, modernize it, fix the roof, fix the landscaping, things like that. So your next question may be, well, Cheree, what's the difference between the 2% grant and the 3.5% grant? So here's the deal. If you were to get a FHA loan today, I looked at the pricing about a half hour ago, and I will say that today is Monday, what is it, the 24th? So prices and interest rates go up and down every day. So this is just good for today. However, if we looked at the FHA loans just, by themselves, they were priced when I looked at them earlier today at about 5.75%, 6%. If we looked at the 2% grant, you would be paying 7.75% in interest. And if we were looking at the 3.5% grant, the interest rate would be 8.25%. So here's the thing. The bank is always going to get its money. The question is, are they going to get their money up front, or are they going to get their money on the back end? So you are able to put less money down, but in exchange for that, you are going to need to pay a higher interest rate. And depending on the purchase price of the house that you're getting, that could be another 50 to 100 to $150 a month. So for some of you, it may be worth it, depending on the price of the house that you're purchasing, to save $20,000 in down payment, for example, or $15,000 in down payment in exchange for getting this grant. So then the question is, well, how do I qualify? How do you qualify? Well, first of all, you must remember that it's purchase only. So this is not available for any kind of refinance. The property itself has to be 1 to 2 units. The FHA program requires that you have a 580 plus credit score. So minimum FICO is 580. The next thing is your debt to income ratio. So basically what the bank looks at is they look at all of the debts that you have, including student loans. Even if they're deferred, we still have to count 0.5% of your balance towards your debt. Okay. So we're going to count your student loans. We're going to count your car payments, your car note. We're going to count your minimum balances for your credit cards, any other debt that is on your credit report, as well as the new mortgage itself. And the mortgage consists of your principal, your interest, your taxes, your insurance, your HOA fees, and mortgage insurance, because you're going to have mortgage insurance for these FHA loans. And we combine all of that together and we look at it in comparison to your income. And the maximum amount that ratio can be is 49.99% for you to qualify for this specific down payment assistance program. The other thing is it can't be used with any other down payment assistance program. So some of you may live in Baltimore or other places where the city or the area has other down payment assistance programs. These programs cannot be combined for this specific program's purposes. So other eligibility requirements is you have to have one of the following. The first is you or anybody who's a borrower on the application can be a first-time home buyer. So sometimes I might have mom and daughter apply together. Mom is not a first-time home buyer, but daughter is. Well, then you would qualify. You could also be in the military. You could be a first responder, an educator, medical person, civil servant. Even if you are a Sunday school teacher, you volunteer in the community, you run a children's group or something like that in the community, you can qualify for these down payment assistance funds. The third way, again, it's got to be one of these, right? The third way is if your income is less than 140% of the area median income. And I will show you if you are outside of the Metro DC area, how to calculate that. And then the fourth is if you're in a property that is in an underserved census tract. So if you meet just one of these, which the supermajority of people can meet either number one or number two, but if you are meeting any one of these, you can qualify. So it's super expansive. So I want to stop here for a second and I want to show you, how you are able to pull up Google here for you. Okay. So one of the questions you may be asking is, well, Cheree, how do I know what my area median income is? Oh, and these are not my searches at all. I don't even know what these things are. Oh, these are trending searches. Okay. Area median income Fannie Mae. This is what you want to put into Google, area median income Fannie Mae. If you do that, then you're going to see this Fannie Mae area median income lookup tool here. So you're going to click on that and you will tell I'm in here all the time. I'm going to click on the disclaimer and I can put in here, for example, I'm going to put in Fairfax, Virginia, and I can either put in the city or the county. I usually like to put in the county. And I can see here 100% of the area median income is 152,900. 120% is 183,480. But this program, our program allows us to be at 140% of the area median income. And trust me, I checked like 5 times with my account executive over at this lender. I'm like, okay, are you sure? And he said, yes, I'm sure. So what we do is we put 152,900 in and we multiply it by 1.4 and we end up with $214,060 is the highest income that you and your family can earn in the Fairfax County area and get this down payment assistance grant. But let's say you don't live in the metro area. Let's say you live in Richmond, Virginia. We're going to come here and 100% of the area median income here is 110,000, right? So we're going to do 110,000 and we're going to multiply it by 1.4. And that gives us $154,000. So if you live in Richmond and you make less than $154,000, you could qualify for this, this grant, okay? They also have in here the underserved census tract. So if I come here, and I'm going to look at the FHA underserved census tract. And I saw it earlier today. And there's actually a map. And now I am sorry, for some reason, give me a second here. Let me look at my source. So I want to make sure that you can find this as well. And if there's any questions, you can definitely put them in the chat and I can answer those as well. But they gave us the, here we go. It's the consumer finance. Let's see if you have any questions. You're saying here, does it have to be first property purchased? No, it doesn't. So I'm going to come back to that. As long as you haven't owned a primary residence in the past 3 years, then it qualifies. You qualify as a first-time home buyer. But that's a great question. And I have more to show you as well with regards to this. So let's see here. Consumer finance. Of course, I had it up earlier today because I was fooling around with it. So there's the consumer finance underserved census tract. I just want to make sure I have it pulled up properly. Here we go. And this is if you wanted to buy, for example, in a rural area or some place that is underserved. So you're able to put an address in here and it is going to tell you if it qualifies. So I'm going to put in here, This is near my house. So it says here, see, it says 200 Hopkins Road. This is a rural area, and it says yes here. So basically, that means that this property would be included in something that can be uh, funded with regards to this down payment assistance program. So I will say, though, I will say that if you're buying in rural America, a USDA loan may be more beneficial than this specific loan, but they do give you the option with regards to this. I just want to make sure there's no other questions in here. No. Okay. So then let's talk about being a first-time home buyer, because John asked about this. You are a first-time home buyer if, number one, you have to reside in the property, okay? Number two, you haven't had any ownership in a property during the last 3 years, and that's either by yourself or with a husband, a wife, you know, maybe your parents, something like that. Or you're still a first-time home buyer if you were a homemaker or a single parent and you had no ownership interest in the principal residence that you had. So again, this is an option for you with regards to understanding the first-time home buyer qualifications. You know, the best way is if you haven't owned a property in the last 3 years, then you're pretty safe with regards to being considered a first-time home buyer. So you can also be eligible, like I said, for this program based on your profession. So if you're military personnel, if you're a first responder, if you're an educator, they even wrote Sunday school teacher in here. You know, if you're medical personnel, if you're a civil servant, you work for the federal government, the state government, local municipality. My account executive even said he's gotten people through again who do volunteer work in the community. Nothing political, but you know, like some of us do work with at-risk youth or, you know, people like that. Any kind of volunteer work that you're doing also qualifies you for these funds. You would just need to write a special letter stating what you are doing in the community. You can again also be qualified based on your income. Again, it needs to be less than 140% of your state or county. I would look at the county as I'm looking in that lookup tool, or better yet, even look at the house. You could even put in the address itself or the city in order to see what the area median income is. But all of the immediate DC metro counties, it's $214,060 right now. And then, of course, that underserved census tract, I showed you that as well. So then your next question may be, okay, Cheree, well, how do I get this grant? Well, you're going to do a regular application with me. You're going to tell me that you're interested in the grant. And then once you find a property and you get a contract, then you are going to actually fill in a special application for that down payment assistance program itself. You're also going to sign a grant letter. That letter is going to be provided to you to sign. And you're going to take a home ownership course. It's an online course. It's kind of like a financial literacy course. Takes about $100 or costs $100 for you to take. So it's not cost prohibitive at all. And then beyond that, you know, the entire lending process is, again, you would do an application with me. We would get you a pre-approval letter. You would work with your realtor. You would find a property. You would get that contract signed. And then we're going to request the down payment assistance. You're going to get your appraisal. We're going to get the title work. We're going to make sure we have all of your documents, including W-2s, looking at your credit, all of that. Actually, the review of your credit happens during the application process. We get your W-2s during the application process. During the closing process, we verify your employment, do a couple of final things, and then you get to the closing table at that time. So that's the overall lending process. And I'm going to keep my number up here. You could either call or text 703-951-4419. But that is all of the information that I have this evening. And now you can even unmute yourself if you want to, or you can put your questions in the chat, whether it's a question about this or some other loan program that we have, or, anything with regards to real estate loans. I'm able to answer those. And if I can't answer them, I will write them down and then get you the responses tomorrow. But I open it up to anybody who has questions. Oh, you're welcome, John. You're welcome.
Hi, Cheree. Thanks for hosting the webinar. It's
Absolutely.
I had a quick question for you regarding the qualifications of the loan product.
Sure.
You did mention that in order to qualify, you should not have had homeowner interests within the past 3 years, right?
Mm-hmm.
And is that specific to primary home ownership, or is that does that include investment properties?
I would have to ask about that. I think, Kabir, you might, if that does not work for you with regards to being a first-time home buyer, you might just be able to fit in under the income requirements. But I can definitely ask about whether or not you could have owned an investment property. But I think based on the way they have it like laid out, that even an interest in an investment property is probably going to knock you out, because you technically wouldn't be a first-time home buyer.
Okay, that's understandable.
Yeah. Yeah, but we could get you in another way.
Yeah, really appreciate it. Thank you.
Yeah, even if you're doing any kind of volunteer work in the community, we can look at that as a potential.
Excellent.
Mm-hmm. Other questions? Okay. Well, I hope everybody had a chance to get my phone number. And I also want to, oh, go ahead.
Oh, yes, hello, this is Conrad. I just have a quick question. It's in regards to the first-time home buyer. Is it a requirement that you have to qualify as a first-time home buyer to be a part of this program, or you can get it, or you can qualify? Go ahead.
Oh, I'm sorry. No, you don't have to be a first-time home buyer. You could either make under 140% of the area median income. In the Metro DC area, that's $214,060. Or you can be like a civil servant, so you work for the federal government, state government, local government, or you can be like an educator, whether you work for the schools as a teacher, you're a paramedic, fire person, police, etc. Even they say like a Sunday school teacher, anybody who does volunteer work in the community can also qualify for these funds. So it's pretty wide. I'm sure that if we spoke with each other, we could figure out a way for you to access these funds.
All right, excellent, excellent.
Mm-hmm.
From listening to you, I'm understanding that the core benefit of this program is that you get the option to have 2.5% or 3.5% assistance in terms of your down payment cost.
Yeah, it's
that
either
is
2% or 3.5%.
Or 3.5%. That is what I I'm understanding as the core benefits, but you have to in order to get that benefit. Is my understanding correct?
Say that one more time for me. You went out.
Sorry, I must have been a bad cellular. You have to pay a high percentage interest rate in order to offset this benefit.
I think I understand what you're saying. You're asking about the interest rate. Yes, there is. With this specific program, yes, there is a higher interest rate for you to get that grant. But the great thing is that you can refinance at any time. So let's say you have the loan for a year and then you refinance out of that loan into a cheaper interest rate and a cheaper payment, you can do that.
All right, I got it. One thing I'm thinking about is there is usually a significant transaction cost in terms of closing costs that you'd have to do again within a period of time once interest rate comes down. So that's going to be additional cost associated there.
Yeah,
So
yes, and you're right.
that
So that's why I
that
said
eats
that.
into the benefit of the 3 point. Right.
Oh, yeah. So yes, there would be double closing costs with that. And I have access to a couple of other down payment assistance programs outside of this one. But yes, there's like give and take there are pluses and minuses with regards to all of these programs. So it really does depend on your specific situation.
Got it. Thank you so much. Appreciate it.
Absolutely. Hey, Delonta, good to see you. Is this available for anyone working in the public school system? Yes, it is. Yes. And I know you work in the public school system, so this is an option. The difference though is that the interest rate is higher. So it's not good, it's not bad, it just is. It's like, okay, am I willing to pay the extra cost for like a year until I can refinance? And the great thing with this program is that they don't have any restrictions on, hey, you have to be in this program for 5 years or anything like that. You can refinance at any time. Anybody else have any questions? Okay, well, this is recorded, so I will be sending this out and I will be once a month doing this session. So if you have any family, friends, or coworkers that you feel like this program would be great for, you could either forward this information to them or give them my number and have them call me, and I'm more than happy to go over this as well as other programs with them. So just wanted to give that information out to everybody, and thank you so much. I'll see you on the next webinar. Take care. Good night.